Welcome everyone to Best in Interest. This is Shane back again for another stock pick of the day video. It is February 25th, quickly wrapping up the month of February here. We're going to take a look at everyone's favorite communications company, AT&T. Before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click that subscribe button down below. Hit the notification bell so you're notified whenever I put out any new content. I do this Stock Pick of the Day video series Monday through Thursday. Whenever the market's open, we take a look at a company that's pulled back on the day, run it through the screener, and see if it makes it onto my watch list. There is the thanks button down below. Also, if you want to buy me a cup of tea, really appreciate everyone who's taken the time to do that. It does help out with the YouTube algorithm. It doesn't cost but a couple seconds of your time. And a special thank you to the viewers and subscribers of the channel. You guys and gals are awesome. The channel continues to grow because of people like you. Now, this is the Vested Interest Stock Screener. You can pause this. This will be how we go through the video here. We'll run it through the criteria, see how it shakes out at the end. We will not be using price to book because this is a company out of the communications sector. I throw this in for companies out of the financial sector like banks and insurance companies. Price to book, one being fair value for banks, is pretty typical. Don't blindly use that for companies outside the financial sector like communications. You want to take a look at communications price to book for AT&T or any other company, compare it to itself historically, compare it to other companies in the same sector, but don't blindly use one as fair value. Now back to AT&T. Check them out at their homepage, www.att.com. That's www.att.com. And AT&T, as I said, they are a communications company, right? They offer phones and devices, wireless networks, phone plans, internet, and that's internet and phone plans and wireless for yourself as an individual. Also businesses, if you have a business out there, you might use their internet plan or phone plans if you buy a lot of phones for your companies. Prepaid services, bundles, right? If you want to bundle everything together, your internet, your phone usage, and try to get a discount, that's the way to do it. AT&T Inc. provides telecommunications and technology services worldwide. The company operates through two segments, communications and Latin America. The communications segment offers wireless voice and data communication services and sells handsets, wireless data cards, wireless computing devices, carrying cases, protective covers, wireless charging, all the stuff around your computer or laptop or iPad or whatever you have. It also provides AT&T dedicated internet, fiber, Ethernet, broadband, fixed wireless, and hosted and managed professional services. And then we'll jump down here real quick. The Latin American segment provides postpaid and prepaid wireless services in Mexico under the AT&T and Unifon brand names, as well as sells smartphones through its stores, agents, and third-party retail stores. So again, communications company offering, communications and internet technology services worldwide. So you may be aware of them. Heck, your phone may be even one that is on their service. www.att.com. That is their homepage. And the reason we are taking a look at them, down to 0.36% on the day. So not a big drop, but a drop nonetheless. We are talking about AT&T Incorporated, ticker T, out of the communications sector. Closed out the day at $26.65. 52-week range as low as $15.94, as high as $27.16. Kudos to those of you out there that were buying them back here in the 52-week range whenever a lot of people were running away from them. That's when I was buying them. You'll see my position. I am long AT&T. I do have a position here. I bought into them a couple years back whenever they first cut the dividend there, built up a nice position, and have seen a very nice return. We'll see that here in a little bit. But they are definitely closer to their 52-week high than their 52-week low right now. Market cap of $191.263 billion, a beta of 0.73, so they are less volatile than the overall market. Price to earnings ratio, PE at $17.88 per share. Earnings per share at $1.49 per share. Ex-dividend date, or earnings date, it was April 22nd through the 28th. Tune in to that little window there to see when they report out, and you can check that on their homepage. Typically, they have a conference call where they cover that, and they usually have it on their homepage where you can see that also. Forward dividend is $1.11. They are quarterly payers to divide by 4, though we will see that here in a little bit. Nice starting dividend yield of 4.15%. Ex-dividend date, January 10th. They did pay out on February 3rd there. I received my dividend. Very nice dividend indeed it was. I have my drip set, so it goes right back in and buys more shares of AT&T. And according to Yahoo Finance, they have a one-year target estimate of $27. So it doesn't speak to very much upside here compared to where it is currently priced at $26.65, but slight upside at least according to Yahoo Finance. Not affiliated with Yahoo Finance, just one of the places I go to for information. Now we're going to look at dividend yield theory here. To do that, we look at their 5-year dividend yield average is 7.06%. We compare it to its current 4.15%, or over here where it says forward, 4.15%. And since it is lower, that typically speaks to overvaluation, and I'm going to say it is speaking to overvaluation now. But I will say they did cut the dividend back in 2022, end of 2021, beginning of 2022, right in that time frame. So 2-3 years ago, they cut that dividend. So it does skew the numbers a little bit, but I'm just going to say it. I believe the company is probably overvalued now. Again, back here at $15.94, much better buy. My cost basis you're going to see here in a little bit. They do have a payout ratio, even though they cut the dividend. It is still elevated a little bit, 74.50, and they have not raised the dividend since they made that cut. I'd like to see this come down a little bit more, but obviously their free cash flow needs to increase. They really have focused on paying down debt. That was part of the reason for cutting down the dividend, which I do like to see. Going back in time here, I want growing free cash flow over time, because typically if a company has growing free cash flow, there's some things they can do with that. They can pay a dividend, which this one does. They can increase that dividend. They can make acquisitions. They can pay down debt. They can repurchase shares, reinvest back into the company. They are using their free cash flow to pay a dividend, but like I said, it has been paused. But let's see if it's growing. 2021 here, $26.4 billion. A big drop in 2022 down to $12.3 billion. Back up in 2023 up to $20.4. Looks like a slight drop in 2024 back to $18.5. So a bit of a cyclical feel here with their free cash flow. They are repurchasing shares. I like to see them pulling shares out of the market as well as paying down debt. 2021 here, they repurchased $202 million worth of shares. 2022, big repurchase, $890 million. So part of that drop you might have seen in 2022 was this big chunk of repurchase shares, but it definitely doesn't account for all of it. 2023, $194 million, which is pretty much in line with what we saw in 2021 and what we see in 2024 at $215 million. So it looks like right around $200 million in shares is what they typically pull out of the market. You'd have to compare that to shares issued to see if it's overall a net decrease or if they're slightly increasing, but I believe overall they are decreasing shares. Now, jumping over to stockanalysis.com, this is another source I go to for information. Again, not affiliated. I do recommend more than one source so you can make sure the information you are getting is accurate and up to date. It's a way to back check information, right? Sometimes the information's outdated. Sometimes it's just plain wrong. It does happen. Now, looking at the 18 analysts that have taken a look at this, they have a low estimate of $18. Again, that was pretty close to where we saw their 15-week low, around $15, $16 per share. So back at their 52-week low is where they see their lowest estimate. That would represent a 32.02% decrease from where it currently sits. Average estimate of $25.89 would represent a 2.23% decrease. And if it happened to hit their high, that's the only way you're really seeing some upside here of $32 estimate. That would be a 20.85% increase. So maybe looking at some of this, maybe they're on the overvalued side. I would tend to say they are at the top end of their valuation range, in my opinion. They maybe have gotten a little bit out over their skis, but the average estimate was pretty close with what we saw with Yahoo Finance, 25.89, 26 something there from Yahoo Finance, 27. So maybe that would be a kind of give you an estimate of what they think, at least the analysts think might be around fair value. Now, I like to look at statistics. I like to look at return on equity and return on invested capital to get an idea of how well the company is reinvesting back into itself. I like 10% or better for both these metrics. Return on equity at 10.23% beats the 10% I'm looking for there just slightly, but the return on invested capital at 6.05% is a little lower than 10%. I'd like to see this increase here. EPS, earnings per share growth, I like 5% or better projected over the next 5 years. They're at 14.67%. I like that. Revenue growth forecasted at 2.32%. Now, again, I am long AT&T. I have 401.58677 shares. My cost basis is $17.13, so much lower than it currently sits at. I am up 54.76%. This is a very good example of buying. It's not necessarily what you buy, because everyone was running away from AT&T whenever I was buying them. It's when you buy them, right? You can buy a struggling company and still get very good returns, 54.76% over the last couple years. I think that beats the market overall. And for a company that most people were saying was dead, way over leveraged in debt, so a lot of times it's not necessarily what you're buying. Obviously, we want to be buying good companies, but even struggling companies like AT&T, who when I bought it was more of a turnaround play, and I was buying it in the $15-16 range, and some of this is actually reinvested dividends that's brought my cost basis up over the last year or so. So it's, again, not necessarily just what you buy, it's also when you buy it, because you can buy a great company and overpay for it, and your returns would be crap. So again, keep that in mind. Up 54.76% in the terrible AT&T company. No one should have bought it a couple years ago, but those of us who did have really seen a nice return. And if I was to sell out of this now, it'd be a very nice return. And I know we looked at the overall yield. My yield is locked in at 6.5%, not the 4% that they're currently at. So much higher than what they currently sit as well. But I am long overall. Now, I've not been adding to this position. I will say I do feel like they are overvalued. I'll just throw that out there at $26. I mean, if they dropped back in the $17, $18 range, I would add some more. But at these prices, I have not been adding. So quarterly payout ratio of 74.5%, which is just under the 75% that I'm looking for. No dividend growth. They paused their dividend back here in late 2021, early 2022 there. I think they were around 53 cents in 2021. And then, like I said, I believe they dropped that right at the end of 2021. Buyback yield is positive at 0.74%. So when they are buying back shares, they're doing it at opportune times. Shareholder yield is positive at 4.87%. They do pay out off schedule of most companies in the February, May, August, November timeframe. And here you go, 27 cents and some fractions of a penny locked in since 2022, and that's where it's maintained it. Now, I bought this one knowing they weren't going to be growing the dividend, and I'm willing to give them a couple of years longer to get their debt under control and maybe start raising this dividend, but I don't want them to do it while their payout ratio is so high. All right, understand the business. Communications company, very similar to Verizon, T-Mobile. That's what they do, right? Communications, technology. Growing free cash flow, no. Up and down the last 4 years. Growing dividend, no. They've paused it for the last 2 to 3 years. Dividend payout ratio is under 75%, just slightly, 74.5. So it's right up against it, but I'm going to give them a check there. Dividend yield theory says they're potentially overvalued. That one might be a little skewed because they did cut the dividend, but I would still say they're overvalued in my opinion. Right now, buy below current cost basis or within 15% of a 52-week low. It is neither below my cost basis or within 15% of a 52-week low, so no check there. Return on invested capital was too low. Return on equity was good, but it's got to hit both 10% or above to get a check mark, so no check there. Earnings per share growth is over 5%, over 14% actually, so it only gets 3. We didn't look at price to book because this is not a financial company. So right now, in my opinion, this one is overvalued. Again, if you were buying it back in the $16, $15, $17 range here a couple years ago or even last year at times, kudos to you because you've seen a very nice return on this one. If you own AT&T, let me know what you're doing with it. Are you looking to take some profit? Are you looking to maybe trim your position or sell out of it now that you've made a gain back? Maybe some of you are waiting for this rebound to be able to recoup some of the money you lost on this one. Let me know what you think. AT&T down in the comment section. I know this one is gonna ruffle some feathers because I know a lot of people had bought this and held for years and then they cut the dividend and they got mad and sold it, or they're still mad and holding it. But let me know what you think in the comment section down below. Love to hear from you. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of AT&T. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like AT&T you'd like me to cover in the Stock Pick of the Day series, drop it down there and I'll try to work it in the rotation on the day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek legal advice and counsel as a certified financial advisor.